This is the Daily Market Comment by Rafi Boyadjian. I'm Maria Pashurdiz. Thanks for joining us at XM.com. Equity markets were looking more cheery on Friday after somewhat of a tumultuous week. Renewed concerns about economic growth amid rising inflation and ongoing disruptions caused by the Delta variant, China's broadening crackdown on private enterprises, and fears that central banks may remove stimulus too soon all came to a head this week to knock stocks off their pedestal. However, U.S. tech stocks had a less disastrous week due to their defensive appeal, while Japanese stocks bucked the global trend as they continue to rally on expectations that whoever replaces outgoing Prime Minister Yoshihide Suga will add more fiscal stimulus to Japan's virus-stricken economy. As for the improved mood today, investors were encouraged by signs of a thaw in relations between Washington and Beijing, after President Biden had a 90-minute call with his Chinese counterpart, the first in 7 months. Although it's too early to say whether anything substantive has come out of the talks, it's provided a much-needed lift in Asian markets today, especially as worries remain about China's tightening grip on the private sector. China's CSI 300 index jumped 0.9% today, while in Tokyo, the Nikkei 225 index closed at a 6-month high. In Europe, the Euro Stoxx 50 was up 0.3% in early trade, and U.S. stock futures were also pointing to solid gains. Heading towards the September FOMC policy meeting in just under 2 weeks' time, Wall Street might struggle to maintain its recent bullish momentum, as the Fed looks almost certain to flag tapering for later in the year, most likely in November. However, as the Fed still ponders its next move, the European Central Bank has beaten the Fed to it, announcing yesterday that it will slow its bond purchases to a moderately lower pace as the Eurozone recovery solidifies and inflation picks up. Not only was the decision widely expected, but so was President Lagarde's attempt to brand the policy change as recalibration rather than tapering. That might explain why the euro posted only modest gains on Thursday, while its advances today were mainly on the back of a weaker US dollar. The New Zealand dollar was the best performer today, while sterling climbed to 1-week highs, in spite of disappointing growth data out of the UK. This is today's Daily Market Comment. Thanks for joining us. XM.com.